Hello, welcome to AleaSoft webinar. My name is Alejandro Decado, Associate Partner of AleaSoft, and thank you for joining us today in this webinar with the topic Prospect for the Energy Markets in Europe, Spring 2025. Our first speaker today will be Oriol Saltó, Data Analysis and Modeling Director of AleaSoft and Associate Partner of Alea Green, that will analyze the evolution of the European energy markets. Then, we are sharing this session with EY for the fifth consecutive year, and the speaker will be Antonio Hernandez, Partner of Regulated Sectors. Unfortunately, Marta Sanchez will not be able to join us today as she had to attend a priority issue that came up. But Antonio will talk about several interesting topics like key milestones in the energy sector for this year, regulation and prospects for energy storage and capacity markets, financing of renewable energy projects, the importance of PPA and self-consumption, and the main considerations to take into account for portfolio valuation. If you have any questions at any time during the webinar, please use the Q&A menu, and we will answer them after the presentations. And now, I hope you enjoy the webinar. Oriol, you can start now.
Thank you, Alejandro. Good morning, everybody. Happy to be here again in our monthly webinar series, again with EY 5 years in a row. Very interesting always what they have to show us. And I'll cover the first part about we will review the energy markets in recent weeks. And we will see, because in our last webinar, it was 4 weeks ago, we were basically speaking about prices going up, gas prices going up, electricity markets going up. The picture is completely the opposite right now. Everything is very pessimistic. There are several reasons. I guess the new presidency in the United States has a huge part on this bearish sentiment in stock markets, also in the energy markets. But we will see, because there is also a lot of influences from this kind of trade war that it's happening right now at the global level. So everything has changed a lot since our last webinar. So let's go ahead and as always, I will start mentioning a few things about AleaSoft and the services that we provide, in case you don't know us. So in AleaSoft, we are market advisors, market consultants for energy markets. We cover all the markets in Europe, also some markets in the Middle East, some markets in North America and South America. And we are data, and we are able to analyze and provide forecasting services, forecasting reports for basically any market at the global level. The forecasting methodology that we use is our methodology developed for ourselves, specifically for forecasting in the energy sectors. The 3 main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. It's a hybrid model combining different statistical techniques from classical statistics, let's say, combined with more advanced techniques from artificial intelligence, machine learning algorithms, recurrent neural networks, etc. This hybridization gets most of its components, and we are able to provide very consistent, very coherent forecasts that keep the coherency over time from delivery to delivery. And the consistency of our forecast is one of the aspects that our clients appreciate the most. And with some of this kind of our clients, we have been developing a relation for more than 25 years now. And well, the experience that using this methodology for more than 25 years, 26 years this year, well, it's we started in the Iberian electricity market, now covering, as I mentioned, all the energy markets in Europe and some markets all around the world. We provide a lot of services along these 26 years of history. We have been developing a lot of services covering the needs of our clients, and we divided all our services in different divisions, so they are easier to explain. We have a division for long-term forecasting, another for short and mid-term forecasting, so hours ahead from up to 3, 4, 5 years ahead. In the long term, we are able to provide forecasting up to 30 years ahead. A special division for anything related with storage, so forecasting revenues for batteries, battery energy storage system, pumping stations, so anything related to storage. We have a couple of marketplaces for PPAs and for renewable energy projects, where we try to put to find the match for our clients for the project that they want to sell, for the counterpart for the PPA, among the base of all of our clients. We have another division for providing information for the energy sector. So we provide reports. We regularly publish news in our website. We make these monthly webinars. And then we have a general division for general consulting. So anything you need related to when making decisions in the energy sector, we provide all the analysis and information needed. With all this kind of range of services, we are able to cover the needs of basically any player in the energy sector. So we provide solutions for producers, consumers, network operators, investors, traders, control center, basically any player in the energy sector at some point will need one of the services that we provide. Okay, let's start as always with oil, gas, and CO2 markets. Oil prices. So basically, in our last webinar, it was 4 weeks ago, around mid-February, we were basically seeing how, since the change in the president in the United States and all the expected change in the energy policies and energy production and export on gas, production of oil, basically we saw how prices went down. We saw them then by around $75 per barrel. Now they went down to $70. So right at $70, they look like they found some strong resistance, so strong support in this case. So we will see why prices when kept going down. Basically, we are getting closer to 1st of April. 1st of April is when OPEC plus countries, producer countries, said that they would start increasing the productions. Right now they have production cuts in place. They have been delaying this the removal of these production cuts. The last date that they updated is April 1st, and they are keeping this this date from now. So basically, as we are approaching this date, and so basically the sentiment is that as we are in kind of a middle of a trade wars with all the tariff topics, basically the economic outlook is not looking very, very good. So let's say so. The consumption side is not putting a lot of pressure on prices. So basically, prices are going down. Right now they are around $70. And as we are seeing that prices are not going down, right now they are above 70. Right now they are 71.02. So basically, this may be a signal that this is as low as they are going to go. Also, we are pretty sure that OPEC countries, if they see prices going down below 70, it's pretty likely that they will further delay this April 1st date for increasing their production. They've done it several times in the past. So it's highly probable that if prices go below that, there are really high probabilities of this delay, of this date being delayed again. So probably it will be difficult to see prices much lower than this $70 that we are seeing right now. But we will see, because we said the same last webinar around 72. Now they are 70, but it looks at this $70 support. It's working right now. So, but we will see. We will see. Kind of some uncertainty in the short term. gas prices. Here is where we are seeing the completely opposite of what we were seeing in our last webinar. In our last webinar, we basically said gas reserves are very low, are much lower than the last year, much lower than the 5 years average. So basically, we are going to need a lot of to buy a lot of gas during the summer. This means we will need to pay an extra because we will need a lot of we will have to compete at the global level with in the LNG market. So basically, we'll have to pay a premium in order to get the cargoes to come from Europe instead of going to Asia. So gas prices, gas is going to be very expensive during the summer. So basically, we are getting prepared for that. Now the situation changed. So the fundamentals are still the same. So we are going to need a lot of gas during the summer, but seeing how prices were increasing rapidly, the European Commission released some of the targets, the intermediate targets for refilling that we had during the summer. So the final goal is having above 90% on November 1st, but there were intermediate targets. They removed some of the targets, they lowered some of these targets, so this reduced the pressure on prices. So we will not need to buy as gas as faster as we were thought. So this could be one of the reasons that there was less pressure on prices right now. Also, also all the situation in the Ukrainian war changed a little bit. Not the reality in the field, but all the potential solutions at the short mid-term change a lot. So this had an impact on this market. This is a very the gas market works a lot on news, on rumors. So just seeing some small light at the end of the tunnel on a potential solution on the war situation in Ukraine, and maybe some Russian gas coming again through Ukraine. This is not going to happen this year. For sure, if we are going to have Russian gas again through Ukraine, this is going to be in 2026, 2027 at least. But just this news, just having those news, just it looks like it had an impact on prices. And then it's another important or quite important factor is that investment funds on those that bid on electricity on gas markets without having to buy physical gas, they were until now in a net long position. So most of the contracts are long, so they were expecting prices to increase. And since mid February, when prices started going down, basically these investment funds started selling those contracts, basically getting all the profit since they bought it around the beginning of last year. So basically taking profit, stop losses orders started kicking in. So basically they have been selling. So this is putting pressure on prices for prices going down. They are still in a net long position. So most of the contracts are still expecting prices to go up in the future. But this means that two things. This means, okay, maybe or probably most of these investment funds are expecting prices to go up again. And on the other hand, it means that they still can sell some of these contracts, so putting more downwards pressure on prices. So we have these two sides from the same data. But again, the fundamentals, that is how much gas are we going to need to buy during the summer in order to refill the stocks, is still in place. Basically, gas reserves are right now at 36%. This time last year we were above 60%. That's a lot of difference. So we will need to stockpile a lot of gas during the summer. So this is the fundamental, that it's basically saying that there's going to be a lot of upwards pressure on prices during the coming month. In April, we changed to the refilling season. Sorry. And on the other hand, gas demand has increased. So in February, gas demand for industry, also for power production. We had very low wind during February, so we need to produce electricity with gas. So gas demand for power and for residential, for heating, has been increasing a lot in February. The gas demand for industry decreased a little bit, but basically on overall demand has been increasing. So gas demand is increasing. We are going to need to buy a lot of gas during the summer. So basically the fundamentals are saying that gas prices are going to be high during this year. But there is also this, let's say, a speculative component on gas markets that right now are putting downwards pressure on prices. How low they can go, it's difficult to say. 40 euros megawatt hour looks like in let's say enough low prices. I would say it's difficult to see prices much lower than that. They went down to 38 euros megawatt hour, I think, but probably the most probable trend for the coming month is upwards. So I would say we should expect prices around 50 euros megawatt hour at least during the summer. Okay, and CO2 prices, well, the CO2 market is basically following the flow of the energy markets. Basically, gas prices are going down. CO2 prices usually have a tight correlation. Well, depends on the season, but they usually follow the trend of gas prices in the short term. So they have been decreasing for the recent weeks. At the long term, again, it's a market that is expected to increase at the long term because it is designed as a tool in order to incentivize the switch to less emitting technologies. So each year there are going to be less and less allowances available. So basically less supply, it means upwards pressure on prices. But in the short term, basically CO2 is following the flow of in general of the energy markets. Okay, now let's see how electricity markets have been performing. And I always take this opportunity to show you our online online database. It's a service. One of the services that we provide to our clients is an online database where you can find data for the energy sectors for all the European energy markets, some macroeconomic data, futures data, fuels, prices, basically anything interesting and related to the energy sector. And we are adding new data every day, and it's you can even make some level of analysis and comparisons of different time series. So very useful, very needed for the energy sector. They say that information is power in the energy sector. I would say that this is even more the case. So very convenient to have everything, all the needed data in one place with the same format, always updated and ready to be downloaded, ready to be analyzed. So what we are seeing here are the average monthly prices for some of the most important energy markets in Europe. The last full month that we have is February. So, and basically in February, the general trend of the prices was going up, basically because during February, gas prices on average increased. We will see afterwards how around mid-February prices started decreasing, but overall, on average, in February, gas prices were higher. Also, we had lower than usual wind for a month of February, so that also pushed prices up. On average, so most of the countries increased the electricity market prices around 12%. France, with the market with the highest increase, 20%. Italy increased of just 5%, and the only market that where prices went down was UK, the Great Britain market, that went down 8%. Again, Italy is still the market with the highest prices. Again, Italy is highly reliant on gas. This makes their prices more dependent on gas prices and less impacted by renewable energy production, as we will see afterwards. The rest of the countries, so basically following the same trend, but with more impact of renewable energies, they have lower prices. If we make a zoom of the last weeks, this is since the beginning of January, those are daily averages. And basically, we are seeing how until mid-February, basically there was a slightly increasing trend in prices. The fluctuations were basically due to renewable production. And since mid-February, when gas prices started decreasing, electricity markets followed this decreasing trend. Again, these fluctuations are basically based on renewable energy productions, and this is why we see Italy here in green with much more stable electricity prices, basically because they are less impacted but renewable energy production. Not because there is no renewable energy production in Italy. There's a lot of renewable energy production in Italy, but they have a lot of gas production. So basically, the impact of renewables on the electricity markets is much lower. If we make a closer zoom until the beginning, this is since beginning of February, and those are hourly prices. Again, prices around 100 and 150 euros megawatt hour. And here again, we see a little more difficult to see, but increasing trend since mid-February and then slightly decreasing trend. And basically we are seeing these decreases that we saw in prices are related with basically with wind productions, episodes of high wind. And this is something that we can see in the case for Spain. This is the daily average prices for Spain in blue, and gas prices in red. Basically here to see since September, how while gas prices were increasing, electricity market prices in Spain and the rest of the countries followed the same trend. Mid-February, when gas prices started decreasing sharply, electricity market prices follow through. Basically, seeing how impactful are gas prices in electricity markets, and those dips, those valleys that we saw in electricity market prices, as I said, related with renewable energy productions, mainly with wind energy production. This is the hourly electricity prices for Spain in blue and wind energy production in Spain in red since the beginning of the year. And basically seeing how episodes of low prices are related with high wind production basically in all the cases. Basically the same relation that we see in France. Those are daily averages, but we see the same relations. Low prices, high wind, and usually low wind means high prices. And this is something that we already saw in our last webinar, but it's very interesting to see. This is the same case, but for Italy. Again, we see basically the price, it's barely impacted by wind energy production. And wind energy production isn't low in Italy, it's quite high. But as they are producing more with gas, electricity markets that are marginal markets, they are much less impacted. So we can see how wind production barely has an impact. Instead, electricity prices are basically following the trend of gas prices, so increasing until mid-February and then started decreasing. So basically, this is what I wanted to show about electricity markets. Let's go back, sorry, to our slides, and let's see now futures market. So what are the futures market? What are the market agents paying now for the energy that is going to be delivered into the future? Also showing what's the vision of the futures prices that the market agents have. And important changes this year, this month. Sorry, in some of the webinars, last webinars, for instance, we saw that basically there were no changes in forward curve. We are going to see a lot of changes in this case, and very interesting changes. This is the forward curve for the Brent oil. We are comparing it with the forward curve that we saw in our last webinar exactly 4 weeks ago. And basically, as the spot prices are decreasing, the forward curve is also decreasing, mainly in the short term. So nearly close to 10% for 2020, remaining of 2025, at 8% 2026, 6.4% 2024, nearly 5% 2028, and much less at the long term. On top of decreasing, we are also seeing some change in behavior. So usually this the forward curve have been for several months in the contango situation. So basically, as we get farther and farther in the horizon, prices go lower and lower. As prices have been decreasing so much in the short term, we are seeing sorry, I said contango, I mean backwardation. We are seeing the usual backwardation situation at the beginning of the course, but at some point around 2027, we are seeing a contango situation. So prices for the farther in the future are more expensive than prices in the near future. And this is not an unusual situation. It's something that have occurred in past months, but with the intensity, let's say with the slope of the curve that we are seeing right now, it's kind of unusual, at least in the recent future. So this is the spread between September 2030 and September 2027. So basically, the slope of the curve in this part of the horizon. And basically, we are seeing a positive slope, meaning that prices are increasing into the horizon. And as we see with this slope, it's haven't seen for much months. It's not unusual, but the slope, the inclination of the slope, it's much larger now than what we have seen in recent months. A lot of changes also, as expected, in the gas futures. Again, comparing it with the curve that we saw 4 weeks ago, huge changes, mainly in the short term. So for summer 2025, 25% decrease in futures, 21% for the winter, 22% for next summer, 16%, around 5%, I guess, for summer 27. A lot of changes. And again, these changes are basically following the spot prices that have been decreasing sharply. But again, the fundamentals for the summer are still the same. So we are going to need a lot of gas during the summer. But future spot markets are quite of, I would say, there's a lot of I would say, not irrational, but what they call the animal spirits. So a lot of sentiments and rumors and news on the spot market. But in the futures market, it's even more, because we're basically talking about the future that nobody has seen it. And again, a lot of decrease just due to the news, because basically the fundamentals are still the same. So I would say, if you have to buy futures for the summer, I would say this is a good occasion, because they are really low, close to 40 euros megawatt hour for the gas during the summer. Again, we are still seeing higher prices for the summer than for the winter. This is something that we have explained it in previous webinars, that it's not the usual situation. Usually gas prices for winter, futures gas prices for winter are higher than for summer. We are seeing here the opposite. But the spread, the difference between summer and winter prices has decreased a lot, basically because all the curve has decreased. So obviously this distance has also decreased. But still, we are still in this situation. CO2 prices, basically the forward curve for CO2, it's very rigid, so it's basically moving accordingly, uniformly in all the horizon, 16% down, following the decrease in spot prices. And future forward curves for electricity markets, basically as expected, following the same behavior of gas futures. Gas prices has been decreasing a lot. Electricity futures has also been decreasing quite importantly. For Cal 26, 19% down for Italy, 18% down Germany, 15% France, and 11% down for Spain. And okay, just to finish, let's see what are the key elements that we are taking into account now when forecasting energy markets into the futures. Also, as a kind of summary of what we have been seeing. So Brent oil prices have been keep going down since we saw in our last webinar that they were going down. They have been going down even more. Right now they are at the level of $70 per barrel. The near future, it's basically we are seeing more probability in stabilization or rebound of prices, because prices going below $70 would mean that probably OPEC countries would further delay the increase in production, getting a little more equilibrium on the demand and supply. So probably we will see a rebound on prices in the coming weeks and coming months. Gas prices, basically following news and rumors about a potential change in the Ukrainian war scenario, also on the Russian supply, but just following the news, because as I mentioned, the fundamentals, the gas demand, all the gas that we are going to buy during the summer is still there. So again, I think it's difficult to see prices going much lower than the 40 euros megawatt-hour that are right now. But it's a very volatile market. So, and basically rumors and news are basically adding volatility, and volatility can go either way, up or down. But fundamentals say that prices should recover in the following weeks. CO2 prices, just following the trend on energy markets, without much personality, I would say. Again, at the long term, we expect these CO2 prices to increase. And electricity markets, following the trend of gas prices, mainly, obviously impacted by renewable production. It will be interesting to see some markets like the Spanish market, that in last spring we had very, very low prices, zero prices, negative prices, very low prices for several hours, for several days in a row during since mid-February until March and April, until the situation started recovering. So very interesting to see what's going to happen this spring. At least right now we are, I would say, much better than we were last year, this time last year. And we would see, because last year we had a lot of hydro production. This year we haven't had such high hydro production, but we've had a lot of rain during last week. So maybe probably hydro production is going to increase in the following weeks. We will see how much impact has this in the electricity market prices. And again, at the long term, so we are right now starting a new five years period. In the last 5 years, we saw the revolution of photovoltaics, mainly renewables in general. These next 5 years, we are expecting to see energy storage, mainly battery energy storage systems, playing a key role, because we have the regulation in place. We see the need of having more storage. So we are expecting to see this 5 years how energy storage is going to have an impact in the energy mix, in the energy markets. So we will see. And at the longer term, we expect prices to be basically driven by renewable energy production, green hydrogen production, and energy storage, and how the hybridization of all these technologies is going to play a role in energy markets. And that's it. Let me end by inviting you to our next webinar. It's going to be April 10th, and we are going to be again with ASEALEN. It's the Spanish Association for Energy Storage. So as I mentioned, energy storage is going to play an important role in the next 5 years and obviously at the long term. So very interesting to have an update on how is the situation of energy storage in Spain and in general in Europe. So that's it. Thank you, Alejandro.
Thank you very much, Uriol, for that insightful presentation, as yours usually are. And Antonio, when you are ready, you can share your slides now and start your presentation.
Okay, thank you very much, Alejandro. And first of all, it's a pleasure to be here again. It's our fifth year of participating in these webinars that you organized, and we are very happy to continue our participation in the future.
Yeah, of course. We are glad to have you, and we hope to have you again next year. Yeah.
Okay, sorry for Marta because finally she couldn't join, but I will try to speak about all the issues. Let me first share my screen. It's okay now. Do you see?
Not yet.
Now?
No, we don't see it yet.
Let me try again. Sorry. Should be now, no?
Yes, we can see the presentation. Just waiting for the full screen. Now it's fine. Yeah.
Perfect. Thank you very much. Okay. So first of all, I suppose you all know EY, Ernst & Young, and here what you can see is that normally when we are working with clients, we work on a holistic way. You know, we try to solve all the issues of clients, in particular in the energy market. Normally we try to combine different solutions coming from different service lines: strategy and transactions, tax and legal, consulting, and assurance. I don't go into detail, but I suppose you know us. Okay, in my presentation, I would like to speak about two main issues: the challenges that we have and opportunities that we have of coming of our new energy and climate national plan, which was revised last year, in September last year, and also some regulatory issues that will be very relevant for 2025 and the coming years. First of all, the Spanish National Energy and Climate Plan for 2030. Very quickly about the targets, in particular, the Spanish government is now a little more ambitious than it was in the 2021 version of the national plan in terms of emissions, increasing from 61 to 70%, in terms of renewable participation in the economy, in final energy consumption from 42% to 48% over the European target. In electricity generation, this is very important for you. The idea is to reach the 81% target, which is a very relevant challenge. We will see later on. In energy efficiency, the situation is more or less the same as in 2021. And concerning our energy dependency as a country, the idea is to reduce this dependency up to 50%. So for me, in terms of renewables, it is very relevant, this slide. No? We have to reach 81%, which means that the capacity, the installed capacity for solar PV and wind will increase very significantly, mainly in solar PV, as you see, 95% increase in the two versions. And this should be accompanied, as you mentioned before, Orion, with storage. Storage will be very relevant in order to avoid distortions in prices. Also, demand will be important, as we will see later. Also, renewable gases will gain importance in the final energy consumption. In the case of biogas, the target has been duplicated up to 20 terawatt hour. The sector considers that this is low. Being realistic, 30 or 35 could be not very difficult to reach. In terms of hydrogen, green hydrogen, the target has been multiplied by 3, up to 12 gigawatts. Electric vehicle, a 10% increase. And all these challenges, I don't go into very relevant detail, are means for different challenges. The first one is the financial one. We need more than 300 billion euro of investment, more than 80% coming from the private sector, and this, very important, requires very stable regulation and predictable regulation in order to attract these investments. The second challenge is more physical and technical, with three main topics. The first one is the needed acceleration of installing the new capacity, mainly in wind and in solar. You can see in this slide that during the last 5 years, on average, Spain has introduced in the system around 1 gigawatt in wind and around 4 in solar. But in order to reach the new target for 2030, the wind energy capacity should be increased on a year basis by almost 5, and the solar PV by almost 2, has to be duplicated. And this is very important challenge. The second is related to demand and interconnections. Demand being very, very important topics. In a market, if you increase significantly the supply, in this case with renewables, and you don't increase the demand on the same basis, you have distortions in the prices, you have curtailments, you have many hours with zero prices or negative prices, and this distort the incentive to invest in the country. So it is very important to think about the electricity demand coming from these 5 issues. First of all, the decarbonization of the industry, green hydrogen, electric vehicles, data centers that we consider could reach around 1.8 gigawatts by 2030, and also the electrification of our ports, because Spain, we have many ports around the peninsula. And if you are interested in these topics about the decarbonization of the industry and data centers, we have some reports available, of course, for you in case you are interested. And in relation with supply and demand, this increase in the supply coming from renewables and demand, it is very important the role that the networks are having and will have in the coming future in order to allow the system, the electricity system, to face these challenges, decentralization, decarbonization, and digitalization. And so investments in the network should increase significantly in the next years. And this means that also the regulation should be very, apart from being predictable and stable, should be very clear in these four topics. First, we need as soon as possible the capacity market. We will see later on. Second, The third regulatory period for grids is here, is coming in the next year for electricity, and the following one for gas. And the new retribution methodology should take into account, for instance, the question of anticipatory investments. The planification should be reinforced, and also other issues that I don't go into detail. Also, it's very important to develop renewable projects to improve the financing. PPAs will pay a good opportunity for investors in order to enhance the financing, and also for consumers in order to receive stable cost for energy. And also, in terms of decarbonization of the industry, it is very important in Spain and also in Europe to put into practice the so-called carbon contracts for difference. In the case of Spain, the Spanish government, the Ministry of Industry wants to be active in this, and we are very proud to tell you that EY has been selected by the Ministry of Industry in order to help them in order to put into practice this new mechanism. And also the importance of off-takers in the consumption of renewable gases. And finally, the last challenge is related to our society concerning the installation of new capacity in renewables. Here it's very important to educate the society, telling that we need these renewables in order to be more independent and more competitive in the coming future in terms of electricity and energy in general. And also, this is one of the reasons why the Spanish government and ministries have introduced in all the tenders this social and economic impact of the plants in the territories. So, after having analyzed our national plan and main challenges, I would like to speak about the most relevant regulatory issues for the coming year and the coming years. I have selected these six topics: capacity markets, modifications in the retribution of renewables, access and connections to the grid tenders in generation and also in demand, cogeneration auctions, and floating offshore wind tenders, which are expected this year. Concerning the capacity market, fortunately, we have a new version of the ministerial order, which was opened for public consultation until the end of January. And the thing is that we need these capacity auctions to be put into practice as soon as possible. For 2025, we need this capacity market. And I hope the first auctions will be held this year, because in all the adequacy assessment undertaken not only by our national system operator, but also ENSOE from Europe, with the agreement, of course, of ACER, the European regulator, what we can see is that our loss of load expectation indicator could be much higher than the standard, especially for 2025, if we don't do nothing. So we need this market as soon as possible to avoid a problem of security of supply for Spain. According to this draft, is a centralized market, is market-wide. That means that all the technologies will be allowed to participate in the different auctions, not only generation, but also demand and storage. The new market, in order to put in competition all the technologies, will establish the so-called firmness factors or coefficients for the different technologies. And also, in some cases, the Spanish ministry could introduce reserve prices in the auctions, maximum prices, especially for existing capacity. And we will see three kinds of auctions. The most relevant ones will be the main capacity auctions for the medium and long term, starting within a maximum period of 5 years, 9 in the case of some technologies, for instance, the case of pumping storage, and the duration of the service would be different depending on the different technologies. From system installations, for instance, combined cycles would be 1 year. For new investment, up to half or their useful life, with a maximum of 15 years. For demand, between 1 and 10 years. This will be the most relevant ones. But in case there are some mismatches, annual mismatches, or any problems, for instance, failures in awarded projects, Spain will need the so-called adjustment auctions on an annual basis, associated with a service period of one year, starting within no more than 1 year after the award. And finally, we will have transitional auctions. We will cover the period when the ministerial order is approved and the first auctions are coming into effect. It's a pay as bid. Some companies are asking to change from pay as bid to pay as clear. We will see the final version. And we know already this, but we need more information in order to participate in the auctions. In principle, the Secretary of State of Energy will have these resolutions, these calls for auctions, including relevant information such as the timetable, the firm power curve, which will be essential in order to analyze the balance and the prices, the power quota for new investment, if applicable, the auction modality, the start date of the service provision period, the firmness coefficients, the flexibility thresholds, the rules for the capacity markets, and the estimated cost of the auction, which will be, financed by the winners of the auction. There are some requirements in terms of emissions, in terms of investments allowed. Renewables will be allowed only if they are merchant. If they are under any retribution scheme, they cannot participate. And okay, this is, there are many requirements. I don't go into detail. And concerning the financing, the mechanism will be financed by the traders and direct consumers. And the idea is to introduce higher cost for the consumption during the most stressed hours. And it would be a supervised market with penalties. The CNMC and the system evaluation will be there. And that's more or less the most relevant thing concerning these auctions, which will be essential for our system. Also, the second topic is the changes in the Royal Decree 413 of 2014. This Royal Decree is very relevant because it establishes the retribution for renewables in order to finance the capex and the opex. So if the market prices don't allow them to cover this capex and opex, they receive the so-called investment retribution and operation retribution. And this Royal Decree was approved in 2014, so more than 10 years ago. Some changes were approved to this regulation during COVID and also during the Ukrainian crisis, but now the changes are more structured. The idea is that with this high penetration of renewables, we have to face new challenges: increased curtailments, reduction in prices, zero and negative prices, and the growing importance of storage technologies. So two main changes. The first one is modifications in the priority of dispatch. Before, it was the concept of being manageable or not. And now the concept is more related to storage. And here you can see for renewables and renewables with the storage of less than 4 hours are the first one. Second, the rest of renewables with the storage, then cogeneration, then pure pumping and standalone batteries, and then the other technologies. And also the other change relevant for me is the corrections of the annual revenues. Article 21 of Royal Decree 413. The idea is that in order to reach the minimum hours to receive the whole amount of the retribution, this would only be applied to the retribution of investment and not to the retribution of the operation. And in case of curtailments and zero prices, this will not be taken into account in order to calculate these minimum hours. There are other changes in this regulation concerning the emission limits and flexibility for cogeneration, more transparency, allowing guarantees of origin to be traded in international markets, and so on. Concerning the third topic, access and connection to the networks, we have a problem in Spain. We have many nodes in tender, and this will be approved in the coming years, in the coming months or year. The idea is that from in the system we have in generation 240 gigawatts reserved by these tenders. We are talking about more than 350 nodes, and this would be taking some criteria into account. If we see the ones that has been announced and by the Secretary of State of Energy, they are mainly the so-called fair transition nodes. That means nodes affected by thermal plant closures. If we see from the different announcements and calls for proposals from 2021 up to December 2024, what we see is that the socioeconomic criteria is the most relevant, but has been increased to 64 of 100. The technological criteria is 20, but now storage is receiving much more importance. Environmental criteria more or less is the same, and maturity criteria is reduced because they have increased the importance of economic and social criteria. That's so. In our experience, we are helping many companies in order to prepare this for these nodes tenders, and also the future tenders related to demand. In demand, we have more or less the same situation. I don't go into detail because we don't have much time, but the idea is that for the time being, we have 28 nodes which will meet the condition to be in this tenders procedure. And here, the ministry will take into account some criteria. The same socioeconomic impact, environmental impact, the investment volume, the reduction of the greenhouse gases, and the maturity of the projects. Here also, it's very important to be prepared in order to participate in these tenders. Finally, two last points: cogeneration auctions. Fortunately, the Spanish ministry has approved these auctions, which come into effect 400 megawatts 2025, 400 megawatts 2026, and 400 megawatts 2027, allowing the installed capacity of cogeneration to increase their life for the coming years. Fortunately, the participation is not only for new facilities, but also for modifications of existing facilities, aiming to improve efficiency or to reduce emissions by changing the fuel Biomass will be included. Hybridization of cogeneration and electrification will be also allowed. This is very relevant. And there are some requirements. Part of them could be flexibilized because the sector is asking the government to be more flexible. For instance, with this 30% self-consumption requirement, or the years of regulatory useful life for some installations, and also the minimum primary energy savings is 15% for big installations of more than 1 megawatt, and this is higher of the 10% coming from the European Union directive. So apart from that, the companies should be required to prepare to submit a strategic plan of this impact on the employment, the industrial value chain, and circular economy, and would be very important to prepare well these options, because they are very complex, and we will be very happy to help you in all these procedures, analyzing if it is sufficient to undertake the investment, which kind of investment, which could be the price to go to the auction, and so on. And finally, the offshore wind. You know that the Spanish government has a 3 gigawatt target for 2030 in offshore wind, floating offshore wind. And last year, it was approved a very relevant regulation, this Royal Decree 962, in which they decided to include in one process 3 main rights for the participants: the economic regime, not only price but also impact on the territory, the reservation of the access capacity, and also the priority in receiving the concession for the occupation of the public domain. So the idea is that in the coming months, perhaps these tenders, auctions would be implemented. In the Canary Island, I think could be very interesting in order to reduce the cost of electricity and improve the sustainability. And then, we will be very happy to work with you in all these issues. Thank you very much. I'm sorry because it's 2 minutes past 11, and I didn't want to prolong my speech more. Thank you so much.
Thank you very much, Antonio, for that great presentation. And thank you again for sharing this webinar with us. And as mentioned before, we hope to see you again next year. But unfortunately, we have run out of time, so we will answer the questions directly by email, and feel free to write to me if you have any questions on the presentations. And as Uriel mentioned, I invite you to register to our next webinar in April. We will share it with ASEALEN again, the Spanish Association of Energy Storage. Really interesting information that he brings always. And thank you again, Uriel and Antonio, for your presentations, and the audience for joining. Have a nice day.
Thank you very much.
Thank you. Goodbye.
Bye.